Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorne.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you this week. Alex Leishman, founder and CEO of River, the Bitcoin-only brokerage, is back. He is our guest. He was here about a year ago, and a lot has changed in the market. River also added a lot of products, started doing the industry's most comprehensive proof of reserves, and has added a lot of interesting products. I think probably the biggest feature set of any Bitcoin brokerage. And they've done quite a lot. They're huge in the U.S. They put a lot of great research. We'll talk with Alex about what they're doing, what their research is showing about Bitcoin's ownership and use in America. We'll talk about quantum computing and is it a threat to Bitcoin? We'll talk about Bitcoin treasury companies, but also what he sees from his seat at River of small business adoption of Bitcoin, which is quite interesting part of the conversation. I know you won't want to miss. We'll cover a lot more, too, with Alex. It's a great conversation. And, of course, we'll check in with our good friend Bimnet Abibi from Galaxy Trading. He is back from vacation, and we're going to talk a lot about Jay Powell's seat at the Fed and the sort of unprecedented political interference with the Fed's independence emanating from the White House and what that means for markets. And before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. It's a great episode with Alex and Bim, and I'm happy Bimnet is back, so let's hop right into it. Let's go to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome back to Galaxy Brains.
Thanks for having me.
It's a strange day today because these attacks on Fed Chair Jay Powell, are they culminating here now? What is happening? This is just as we started recording on Wednesday.
Yeah,
the 16th.
so, apparently Trump spoke to congressional Republicans about firing Powell. He's also apparently already drafted a letter firing Powell. I think the rationale they could potentially use to fire him, given that there's no precedent and that apparently they don't have the legal authority to do it, is, his misappropriation of funds for the Federal Reserve renovation that's
been
happening.
going on for a long time, that
Correct.
renovation. Because he needs, they think, under the law that he would need to fire
Just
Jay for cause.
Correct.
And not lowering rates isn't cause.
Correct. And so it is really, I think about it as like crossing the Rubicon of Fed independence when a president, basically can replace a person that isn't replaceable and will replace him with somebody who is more aligned to his political and economic viewpoints. And the beauty about the Fed historically has been that it's operated in an incredibly independent lens. And, I think Powell has done a tremendous job and his legacy will be a great one. He is the Fed chairman that took the U.S. through COVID. It was a crisis like nothing we've ever seen before. He implemented global FX swap lines. He implemented loan facilities. During the regional banking crisis, you had the BTFP. Basically, every step of the way, the Fed had responded in a way that calmed global markets and kept things moving in a manner that benefited everyone. Yes, he's made mistakes, but so would anyone in that seat, and it's really hard to operate with imperfect information and with a level of uncertainty that we haven't seen historically. And so, I think it's a little bit of a sobering moment, and I think the market reaction to these rumors is quite telling, right? You've seen Eurodollar go from 116 to 117 pretty quickly. So the dollar generally is getting hammered. That's partially a function of interest rates moving lower in the U.S. because, whoever Trump appoints will likely pursue a more dovish path. But long story short, rates are bid, and they're rallying. Equities have been moving lower as well because of the increased uncertainty. And yeah, the dollar's weakening and gold is rallying. And to go along with that bit, Bitcoin's initial reaction was higher as well. And I think that's largely the trends that will stay in place if we continue down the path of firing Powell.
Yeah, I think you said crossing the Rubicon, obviously referencing Julius Caesar bringing for the first time the military that he controlled as the general into Rome proper, which sort of is seen as the last point of no return for the death of the Roman Republic and the rise of the Roman Empire. And it does feel, I mean, President Trump, both in his first term and so far in his second term, has bashed the Fed chair and the Fed and tried to influence, and call mostly for lower rates, always for lower rates. Yeah. But actually removing him would be, for what everyone knows, is because of the president's view on where rates should be, and not because he's just figured out the Fed reconstruction project, the buildings renovation, has been going on for years.
Yeah, I've never known a
first we've ever
construction
heard of it.
project that comes in under budget. That doesn't seem like a reality. I mean,
And also,
if you
isn't it-
budget $1 billion for something, by the time it's completed, the money's devalued by at least 4% a year.
Yeah.
Right? So, are you accounting for that when you're even
Yeah, that's a
doing
good
it?
point.
And so it doesn't make any sense to me to fire somebody for a building project and it's not even his
But you-
primary job.
Agreed. And you had seen, we don't know if that's right. We don't know if in the supposed letter that's the cause that they're citing, but you did start to see over the last week the president and his proxies and allies and other members of the administration start raising this as the issue, which did look like sort of laying the groundwork for saying that maybe that's the cause they need.
Yeah. And personally, if you want to fire him for cause, do it. But don't besmirch his name on the way out, because he, for all intents and purposes, is a patriot, a card-carrying Republican, not even a Democrat. And he's doing his job to the best of his ability. And when I say he's doing his job, it's the entire Fed board, right? There have been very few dissents in his entire term, right? And so he's been able to build a consensus amongst a diverse group of intellectuals, right? And he's operated about as well as you could ask for. Obviously, they were a little, late reacting to the inflation stuff.
So was everyone, right?
So
Everyone was wrong about that or whatever.
I mean, there were some people that were like,
No, but
"Guys,
I mean,
you
all
can't
the
print this much money
all
and
the
not have
central
inflation."
banks, though, kind of
Correct.
all missed.
But I will tell you, I've never met a good inflation forecaster over a long period of time.
Yeah.
It's so hard to predict. And it's even harder to trust how the data figures that you're looking at. And so there's a whole lot that goes into it. But, I think he's been an excellent public servant.
And also, it was Yellen who, as Treasury Secretary, had said it would be transitory. I don't think the Fed specifically said that. Yeah. And also the pushback, by the way, on central banks having not predicted correctly the inflation pathway is happening globally. I think I read that in Australia, there's a whole inquiry into the Australian central bank about why they were wrong, quote unquote. And I do agree. I think for the most part, the answer is it's really hard. It's really, really hard. And I also agree with your point that this Fed and Fed board led by Jay Powell has tried really hard to do the right thing and has mostly done a pretty good job, right? Look at the U.S. economy. It bounced right back in COVID. It's been strong since
stock
for the most
market's
part.
at all-time highs. Unemployment's at 4.2%, right? They have
CPI came in soft, right?
They are meeting their congressional objectives.
Yeah, their statutory mandates with pretty much low unemployment. Inflation has come down after the spike.
Yeah, absolutely.
All right, well, that's it. Our friend Bim Metabibi from Galaxy Trading, thank you so much.
Thank you for having me.
Let's go now to our guest, Alex Leishman, founder and CEO of River. Alex, welcome back to Galaxy Brains.
Thanks for having me back.
Love River, and you guys have been doing a lot. I mean, you were on about a year ago, if I recall. I think it was last summer. So it's been about a year, and a lot has changed at River and in the Bitcoin world. I don't know what, in your mind, in a few words, what has changed? It feels like the markets are in a totally different place.
Yeah, I mean, it feels like a different world from a year ago. I think the biggest step change was the presidential election.
Yeah.
We saw growth across the entire industry there, and I think the election and Trump winning was really sort of the final nail in the coffin for the anti-Bitcoin
Yeah.
movement.
Yeah.
And I think what we've seen is now Bitcoin is permanently a part of institutional capital, permanently a part of our society, and it's locked in. There's no undoing that.
Yeah, it does feel. And actually, if we look at, there's a lot of price chop last year between March and November, but I think actually year over year at this exact moment, we're basically up 100%.
Yes.
I think it was about like 55K.
Mm-hmm.
So, I mean, my gosh, that's a change. Have River users been stacking?
Absolutely.
Yeah.
Yeah. We've got over 2.5 billion under custody now.
Wow.
And now a lot of
Congrats.
people still withdraw as well, so it doesn't even include that. But yeah, I mean, one of the most satisfying things is seeing our clients grow their wealth and knowing that we had some impact on helping improve other people's lives. But yeah, they're still stacking, and we're seeing record growth.
Well, I'm stacking, and I have been using River for recurring purchases for quite a long time. And I tend to let it run up like to a decent chunk and then withdraw to cold storage and then let it run up, and then river.com, also a phenomenal domain name, by the way.
Thank you. Thanks.
Better than Alto Finance.
That was our first name, and I'm glad we got that cease and desist. That forced.
Is that how it happened?
There was a trademark dispute, and so we were like, you know what? We don't even like this name that much. I'm not going to fight it.
Yeah.
Let's find a realgood.com. And you know what? No one hates rivers.
No, it's awesome.
Everyone
It
likes a
flows.
river. Yeah.
So the flows have been coming through River as well, have they not? I mean, you like to post the buy-sell ratio sometimes during like market events.
Yes.
It seems like River users are mostly stacking.
Absolutely. Yeah. And I think in a few hours, actually, we're going to cross the milestone of surpassing last year's volume.
Oh, wow.
So, sometime today we'll cross having surpassed last year's entire volume.
That means you're on track for about double 2024.
Yeah.
Let's talk about one of the big topics in markets these days, which is these treasury companies. It had been just MicroStrategy or Strategy now from 2020 until sometime last year when Metaplanet launched. Metaplanet also been quite successful, but since then, there are now maybe like 100 or 50. I know if you expand out, now people are doing other like altcoin company treasury strategies. I think we're aware of over 100 combined, but most of them Bitcoin. I don't know. What's your take on these companies generally?
I think that it's a bit of a gold rush. I think Saylor was sort of the high IQ genius behind this idea, and now people are trying to see if they can also imitate that playbook. I think it's a big TBD if they can. Metaplanet is a bit unique. It's the Japanese version of MicroStrategy, and Japan's a bit of a unique thing because there's a very high capital gains tax on selling Bitcoin, but not equities. And so there's a real economic advantage to owning something like that if you're Japanese.
Yeah.
I don't know that that's going to be the case for these other companies. I mean, people are trying to do it, in other jurisdictions like Brazil or Europe or things like that. But I don't know. I'm a big fan of Michael Saylor. I think what he did is genius. I do worry a little bit about some of the ICO vibes that some of this stuff gives. So let's see.
Yeah, I think the story is not played out yet. We're still in the explosion phase. I think the Cambrian explosion of these things.
Mm-hmm.
To me, I mean, I don't think they're a risk. People ask, like, is it like, what if they all blow up? And the reality is most of them are quite small by comparison to Strategy.
Mm-hmm.
So I'm not really that concerned about it, really. It is, it's like you wait for years to get the ETFs because like that was supposed to be the equity-based way to get Bitcoin, but like now these things are here too.
Yeah.
It's kind of funny.
Yeah.
I agree. Michael Saylor, I think they're going to be studying Strategy in at Harvard case studies and all that stuff for like decades. Basically, what he did.
Totally. And I don't know what the end game is, how it all plays out. Maybe it's up forever. But it is very fascinating. I think he just unlocked sort of, I think the real impact though was, I think Saylor was sort of like the unlock for the capital class and the institutional capital to really go, this is something worth paying attention to.
Mm-hmm.
Somebody who speaks their language, somebody who was sort of in those circles, and that was the big unlock. And I think he's done a lot for Bitcoin so far.
Yeah, I think one of the other interesting things was like when you think about corporate buying, and these are corporates, I still think we want to see, and it makes a lot of sense, but we sort of thought that it would be more about like corporations that have cash on their balance sheet, perhaps allocating some to Bitcoin because of its historical performance and the empirical data that shows that adding just even a little bit can like dramatically improve the quality of a portfolio. Are we still seeing that? I know you posted a great video of an optometrist business that buys Bitcoin for their business. What are you seeing on like the smaller business front, or just like the generally like putting Bitcoin in a balance sheet as opposed to running your whole company on it?
We're seeing record levels of small, medium-sized businesses across the United States buying Bitcoin. Yesterday was a record day for us for a number of new businesses signed up. Every now and then I'll tweet sort of a sample of the types of businesses onboarding, but we see everything from a hot dog stand to even small public companies to large, manufacturers, food businesses. Some private companies you've heard of that are stacking, and they're not running a Bitcoin equity playbook. They're just running I want this in my treasury because I want to protect the company's assets against inflation.
It's incredible. It shouldn't be surprising. I've been asked sometimes why a company might put Bitcoin on their balance sheet, and to me, it's just like I said, the math is pretty straightforward, historically speaking. Like, it's good in a portfolio. Like, I think we did some research and found that. It's we can go back and see exactly what the best amount would have been. Sometimes it might have been theoretically, historically good to have 100%, right? But I think one of the things we did was looking at a classic portfolio, like a 60-40 equity fixed income portfolio, and just going from 0 to 1% had the biggest net improvement. Like, just having any.
Totally.
It got better at different times during different windows that you look at in market data history, but just having any was the biggest net improvement.
Totally. And we did some research just on protecting your corporate treasury from inflation, and we looked at Apple's treasury, and we found that if Apple had just allocated a few percent of their treasury to Bitcoin, they would have totally protected their treasury from inflation, which otherwise lost a substantial amount of purchasing power.
Wow. Another thing you guys have talked a lot about is focusing on the United States. So River is, like I said, the products you guys have made and the brokerage, even your mobile app is really good, which is tough. I know. Sometimes, look, even like if you look at Coinbase, like, their mobile app is like, it's fine. It feels like there's significantly more functionality on their website than there is in the mobile app, but it doesn't feel that way to me when I use River. And so you get a lot of people saying, well, I want to use River in Europe. I'm in Germany. When am I going to get to use River? You've had sort of an interesting answer to that.
Yeah. We're focused on the U.S. We will support international clients who are high net worth or businesses who can wire into the United States. But I'm a big believer in focus. River today is still, by many measures, a small business. Like, we're not Google, right? We're not JP Morgan. We're still rounding errors compared to these guys.
Yeah. And
the United States is the wealthiest country that the world has ever seen in the history of mankind. I want to do that really, really, really well. It's also my country. I see Bitcoin as a force for change in the United States, reigning in the power of the government and empowering, Americans economically. And I think it's, I want to work where my heart is. I want to level up my own country, and so that's the reason for the focus.
You also put out some research. Got a great team there with Sam Baker and Sam Wouters, now I guess who's director of marketing. But you put out some really interesting research about America's dominance of the Bitcoin industry. What did you find in that research?
Yeah, so we found that by and large, American companies and Americans dominate when it comes to Bitcoin, and Bitcoin doing well will disproportionately make America more wealthier than other countries. And what we found was that over 90% of Bitcoin held by public vehicles is held in public vehicles owned by Americans, and about 40% of Bitcoin is owned by Americans, or over 40%. And so that's a higher percentage than America has of other measures of wealth globally. And so yeah, not to mention the vast amount of Bitcoin businesses, mining operations, and jobs that the industry has driven in the United States.
So it makes sense to focus on the U.S. You're here. You've got a big operation. One of the other things you guys are well known for is having really good Lightning services. And Sam Wouters, not Sam Baker, although maybe you guys will do it again, but had put out some great research on Lightning that because Lightning, there isn't really like a Lightning network, right? It's a mesh overlap of bilateral payment channels. So having a central or well-connected node gives you the data you need to put out a lot of interesting information. What would you say about the Lightning network from your vantage point these days?
Yeah, so my view of the role of the Lightning Network has changed a bit over time. We're seeing an uptick in volumes routed on the Lightning Network, and in the last year, the volume routed has gone up, but the number of payments has gone down. So we're seeing more just large transactions happening. What my theory for the long-term role that the Lightning Network is going to play is, and I'll credit this to Dario, the founder of Moon Wallet, who is, I think, one of the best thinkers in this space, is that in the long term, I think we're going to see a lot of different type of layer 2s for Bitcoin exist as Bitcoin transitions more and more towards a medium of exchange and transactional currency. I still think we're quite a ways away from that future, by the way. But what's unique about Bitcoin is we have this Lightning Network, which can serve as the glue between all of the different L2s that might exist. And what you're seeing in all of the Bitcoin L2s being built is that they're all being built to be compatible with Lightning as this way to route in and out of them. That doesn't exist on other chains, where each L2 has their own proprietary token, and there's no intercompatibility because there's no incentive to be. So I see a future where the Lightning Network is this glue between custodial institutions, other scaling technologies, and it plays a key part in the Bitcoin ecosystem. I also think it'll be interesting to see how Taproot Assets works out with stablecoins coming to Lightning.
Yeah, that will be interesting. I know that Lightning Labs has done a lot of work on the TAP protocol, Taproot Assets protocol. Is that what they call it? And I know Tether is committed to launching tethers on there, or I don't know what the term is, but issuing them maybe on there.
USDT.
Yeah, issuing USDT on there. I still like to call them tethers from back in the day, but yeah, so that will be interesting. I mean, Tether is massive. I think they're over 100. Is it over 150 billion? I think circulating
that's right.
supply.
I think that's right.
Let's talk about stablecoins a little bit too, because I think as we record this on July 16th, the U.S. House is supposed to vote on the Genius Act. Again, it briefly failed due to an internal scuffle among Republicans yesterday on the 15th, but I think around 12:30 today they will vote again on it, and we expect it to pass. So without doing a whole show on the Genius Act, but we expect a significant growth in the use of stablecoins in the U.S. How do you think of stablecoins and also interacting with River and Bitcoin generally?
Yeah, so as it relates to River, I always just think about what does the client need, right? And I think that in the short term, we'll continue to see an explosion of stablecoins globally. I'm a bit skeptical that stablecoins will play a big role in the life of Americans day to day in the near future, mostly because there isn't an obvious problem they solve for Americans day to day. And so, but the way I view integrating stablecoins into our product is I just view it as another dollar rail. I don't view a stablecoin as an asset. I view a stablecoin as a way to move dollars. Just like a bank wire or an ACH, it's just a lot better. And so because of that, adding stablecoins to River would just look like adding a third deposit and withdrawal option as a stablecoin rail instead of wires and ACH. And that's how I view it. That's how I think most financial apps will integrate with stablecoins. But I'm pretty excited for them to continue to proliferate, because I would love to see them disrupt the Visa and MasterCard. It would be better for everybody. Yeah,
I agree. I feel like it's mostly to the extent you are aware that they are even there, it's mostly maybe competes with debit cards. Maybe people start getting paid in, again, if they're getting paid in dollars, I think most people are going to use their bank website or app or fintech app and just honestly may not know whether they're stables or not, and it really shouldn't matter. But you might. What I'm excited about, just one of the things, is that you will maybe for the first time be able to actually hold a digital dollar that is like widely accepted and considered fungible with cash without like in a not. You might be able to hold that finally in a non-custodial manner, which is kind of interesting.
Correct.
Because like cash in a Venmo account is not like cash in your. You don't really have it. I mean, right?
And there's all these horror stories about people getting their PayPal accounts locked and they lose $10,000. And now there will be a whole nother class of issues, if with self custody. But nonetheless, I think it's going to be a big win.
Yeah, and I agree with your point. I think in terms of like day-to-day Americans using it as opposed to businesses and other uses for digital dollars, Americans are well served for the most part, right? You got
Totally.
Cash App, Venmo, and
I mean,
Zelle, right? I mean, you got
Yeah.
plenty of ways, I think, for most Americans, and maybe not all, but abroad the story isn't so good, right?
I think that's generally true. Although the card networks have been making big plays, I think really the value internationally is not as much the payment rail as it is being able to just have dollars, right? And instead of your crappy local currency.
Right.
I think that's really the product market fit there, is saving.
Yeah.
Transacting is easy. I mean, it's often better in developing countries. Like, for example, in Brazil, right? The Brazilian real is not a good currency, but Pix, the payment rail for the Brazilian reais, is amazing.
Is it really?
It's just instant, right? Better than stable coins. And Visa internationally is also amazing. I was on the border of Brazil and Paraguay and bought a coconut for $1 with Apple Pay.
Wow.
And it took a second. So I'm not as convinced that like these are going to unlock amazing consumer payments experiences in the near term. Maybe online payments or something like that. Maybe merchants will start using this because they don't have to pay credit card fees, but we'll see.
Yeah, I tend to agree with that. I think there are some big unlocks, but the ones that I gravitate towards are not mostly consumer payments, right? It's things like big giant retailers having to pay like 2-3% of the card networks, and like if they could get their consumers to use stablecoins or their supply chain to use stablecoins, then perhaps they save a lot of money, right? And I also view it more as like a dollar dominance, like a geopolitical macroeconomic legislation, right? It's what Scott Bessent said that the government and the Treasury intend to preserve and grow U.S. dollar dominance and plans to use stablecoins to do that. So it seems more of like a U.S. like an upgrade for the dollar that is helpful for American power than something day to day we may use.
I think it's a useful way to dollarize the rest of the world. And what we might end up seeing is that trickling into the consumer payments domestically eventually. I think someone else described it as sort of the WhatsApp effect, right? It's like Americans never used WhatsApp until the last few years. All of a sudden, like you have that European friend who, or who messaged you on WhatsApp and you have it now, and then you start using it more and more and more. And so
I think that's right.
That might be what happens.
Yeah, it just becomes really popular and then it just eventually trickles in. Is there like a particular, one of the things people ask is like, is the growth of stablecoins like bullish or bearish for Bitcoin? I think it's mostly neutral in my opinion, but I don't know. Do you have a view on that? The interplay between the two assets?
I think if anything, it's bullish because stable coins aren't going to stop inflation.
Right. Yeah, they're still just the U.S. dollar.
They're still just the U.S. dollar.
Yeah.
Now, I do think that if a KYC-free dollar or like eCash, if PayPal could have built a KYC-free eCash server when they first started, would Bitcoin have been built? Maybe not.
Right.
But that doesn't solve the inflation problem. And now that Bitcoin does exist to solve the, inflation problem, I think that just accelerates growth because now anyone who has stablecoins can easily convert it to Bitcoin once they realize their purchasing power is still eroding.
Yeah, and the stablecoins as designed surely in the Genius Act and in general the big ones, they're not immutable. They're not really censorship resistant, right? Like government can serve a due process of some kind, legal process on Circle or Tether, and they will freeze and seize those dollars. So there is a use case that they don't solve. I mean, that's not. So it really is that like for dollars, like physical cash is like the only bearer version.
Yes.
Still.
Yeah, still.
Yeah.
Now I do think that it will just be more censorship resistant than electronic accounts
Yeah.
because they're only going to go after the big guys with that kind of thing.
Yeah.
Right? Joe Schmo won't have his bank account locked, but
Almost certainly not.
won't have
I
his stable
agree.
coins frozen, most likely. So,
I mean, this is why the Republican Party has been very opposed to the CBDC, which is, I think, one of the reasons, right? The anti-CBDC, the bill in the House that prohibits the creation of a CBDC is called the Anti-CBDC Surveillance Act. They're very concerned about the centralizing power, that if it was the government as the issuer, they might not even need legal process. They could just go around. And I do think the act of just like you do need to like serve like some kind of like a subpoena or a freeze order or something
yes,
from a judge
exactly.
in order to get not necessarily a judge. I mean, I guess OFAC can just send a letter saying, hey, like that's a terrorist. Could you please freeze it? But like that extra step alone does provide some censorship resistance.
Yep.
But it is so fascinating that in 2025, still pretty much really the only uncensorable digital money is Bitcoin.
Yeah, totally. Because, I mean, at the end of the day, a dollar will roll up to the Fed, roll up to the U.S. government. A fiat currency always has
it's
a
a
choke point.
liability on the government.
It always has a choke point,
Yeah.
and that's the genius of Bitcoin. And that's why that's, I think, the end state. But dollars are going to be around for a very long time.
I think so too. I think it is possible. I think that we're in the twilight of the American, I would say it's likely that we're in the sort of twilight of the American power, that it's possible that America's relative power to the rest of the world has already seen its peak. I think that is possible. But that doesn't mean that it's going to that there's some suddenly event that's going to happen that very unlikely. Like, because other countries and their monies, for example, are not better than the United States, really. They're not more powerful. But, I guess it's that like 92 to 2001 was like Pax Americana for power. But I do think also the dollarization of the world with stablecoins, as you mentioned, that does probably grow and extend the dollar's life and reach and power. So it's quite interesting what they're trying to do with that. And also, I've been thinking a lot about, you mentioned the card networks. Like, who does this help and who does it hurt? I mean, surely it helps the existing stablecoin issuers. I
Yeah,
think, but also may they be about to face unprecedented levels of competition.
right. Like, I mean, does J.P. Morgan get in the game?
I think they have to. I would assume that all the big banks are going to.
Right.
They're explicitly authorized to do so by this
Yes.
bill.
And also, I think the bill prohibits the stablecoins from issuing interest to the holders of the stablecoin.
does.
Now, there's like backdoors with rewards and
Surely there's
stuff
some
like
way
that.
they can figure it out. Yes.
But so I do think that I have a hard time seeing the big guys totally disrupted by this. But you never know. Like,
Yeah.
it could be like in 20 years, Visa's like, oh crap,
Yeah, I think
know.
it could. It
or
could.
10. Yeah.
I mean, it'll be one of the most interesting innovation disruptions for like traditional dollar payments in decades, or I don't know since when. It's an interesting one to watch. I wanted to ask you also, Alex, about River's use of Bitcoin Core. There's been some debates about some changes to Bitcoin Core, the software that are being made, that have resulted in a debate with particularly supporters of Bitcoin Knots, which is an alternate implementation of Bitcoin, a software client, around, I would say, ultimately emanating from the Bitcoin Core client's handling of non-financial transaction data, so arbitrary data transactions. But and so some have been arguing for people to use Bitcoin Knots instead, which is, I think, fine. But you said that River uses it proudly and for interesting reasons uses Bitcoin Core. Could you elaborate on why River uses Bitcoin Core and plans to in the future?
Yeah, and I believe everyone has the right to run their own Bitcoin node software, whatever they want it to be, whether it's Knots, whether it's their own custom
Limit
written.
Bitcoin or other. I don't know which other ones there are.
I mean, there used to be all sorts of versions, and I've played with them. Like, there were ones written in JavaScript or ones written in Haskell, and I think that's great. Experiment. For River, we're a financial institution, and we need a node implementation that is very heavily audited and has strict controls around the code written and the release cycle. And so we're very conservative. We won't even run a new version of Bitcoin Core unless it's been out there a little bit of time.
Yeah.
And as for the spam problem that this debate about sort of mempool filtering, should a Bitcoin node filter out transactions that are kind of abusing Bitcoin script to store data? I think like if it was up to me, if I was running Bitcoin Core, I'd make it a flag that made it optional. Like, what do you want to do with your node?
Yeah.
I do think at the end of the day, what matters is the consensus rules on the blockchain. The mempool rules they're important for various things, but at the end of the day, what are the blockchain rules and what are the consensus rules, and that's really where the important conversation should be. And I do think that it is a little bit of a moot point at the moment because the mempool's empty and has been empty for quite some time. It doesn't mean that it won't ever be an important thing to have made the right decisions on, but I do kind of wonder why it's such a big debate because nobody is even the fees are, as close to zero as they can be right now.
Yeah. I mean, I think you've got some people getting like sub 1 sat per VByte transactions mined, which those are not relayed by Bitcoin Core, right? So it's kind of an example. I guess this has been a little bit of like a demonstration that different in that spam versus like, or saying that arbitrary data is spam, and the other side that says that I don't think they say it's not really spam. They just say it's mostly not possible to stop. And one of the ways they've been trying to show this is by getting these sub like fee, 0.1 sat per VByte transactions mined.
Mm-hmm.
How are they getting those mined if they're not getting relayed by Bitcoin Core?
I don't know the details of that, but presumably submitting it directly to a mining pool.
Yeah.
And that's another sort of unintended consequence of having too much sort of too many rules at the mempool relay layer that differ from consensus rules, because if there is a big enough economic incentive for these transactions to get mined, someone will find a way to get them mined. They'll just pay miners directly, and now you're creating the system where people are routing around the peer-to-peer network and going straight to miners, which maybe actually is even worse than having transactions you don't want floating around in the mempool.
Yeah, that's been one of the arguments against adding more filters, right?
Mm-hmm.
I think concretely one of the sides, I think Matt Corallo has been one of the people who's expressed this eloquently, was that you really want transaction relay policy to be as close to consensus policy as possible.
Yes.
Right? Because otherwise you end up with like flashbots like on Ethereum, where
Yes.
basically there is no public mempool that's worth anything on Ethereum at this point.
Yep, I agree.
And that's that means when you have something like that, you run the risk that deep-pocketed actors have better access to the blockchain than everyday folks, right? Because Bitcoin's mempool is still quite good and robust.
And arguably, you could argue that the most, Bitcoin Core, by trying to make the mempool policy as close to consensus policy as possible, is the most sort of decentralizing decision to be making, right? If Bitcoin Core can unilaterally, restrict mempool policy away from consensus policy, you could argue that's actually centralization of power, right? So if you want to change a rule, like, let's get the consensus rules changed.
I agree with that take. Another interesting one happening in sort of the discussion happening in the Bitcoin development world relates to quantum computing. And I guess the general threat is to cryptography in general, sort of a classical cryptography, right? Asymmetric public-private key cryptography. And the idea, I believe, and maybe I don't know if you've looked into this, I've been hearing about this question for years, and it's been mostly FUD, as they say, fear, uncertainty, and doubt. But it does seem like, not just in Bitcoin world, in quantum world, there's a lot of improvements and new research happening that makes it seem like it might be finally getting closer. Are you worried about the risk to Bitcoin's cryptography from quantum?
Yeah, so I have a decent academic background in cryptography. Quantum is like a whole nother world, so I'm not like in super deep in the quantum space, but I think one of the issues is no one is.
Yeah.
Like very few people are. And so one of the issues with the quantum computing thing is everyone who knows enough about quantum computing to know really what the risks are economically incentivized to tell you the risks are high because they're probably working at a quantum computer company that's raised a bunch of money and needs to like convince investors this is going to be a big deal.
That's true.
So it's kind of like crypto where you get this like small insider group with somewhat perverse incentives. And so I'm actually really skeptical that quantum computing is a threat to ECDSA, the signature algorithm used in Bitcoin, in the foreseeable future. It could be famous last words, right? Now, that said, the chance that I'm wrong is non-zero. And so just simply because of that, right, we should have a plan. And so I do think the right move is to be working towards a plan to get ahead of this if and when it does become viable to crack ECDSA. And I do think, though, it's really important to really get some people inside the quantum industry to like really actually understand what the risks are, because I'm still not convinced people really know.
Yeah, it's hard to get good information too because in my mind the two questions, whether it's Bitcoin or any other system that uses cryptography, which newsflash is almost every system, the two questions are: when is it a threat? If you assume it is a threat, when is it a threat, and how do we mitigate or fix it, right? And there's so much debate about when, and I think part of the reason is that like I think these are basically classified national secrets, because even if you're a private company working on it, say like Google, which is doing plenty on quantum, like surely the United States government has an interest in containing, knowing, competing with China, for example.
Yes.
So like no one's really very straightforward about how far along they are.
No. And if this first successful quantum computer is a government project and that government is not North Korea, then probably what they'll be using it for is not stealing Bitcoin. It's probably for cracking internet traffic that they've observed and saved. But I do actually think that like if someone wants to use a quantum computer to make money, Bitcoin is the first target. I think that the argument's like, oh, well, what about all these big companies that haven't secured their system? I actually don't buy that argument. I think those things are much harder to hack with a quantum computer because you need to still man in the middle things. You have to Bitcoin is literally like, here is a piece of data. If you have a quantum computer, you have billions of dollars.
Yeah. There's
no other work required. And so because of that, right, I do think Bitcoin will be the first economic target of a quantum computer if we don't get ahead of it. But the thing is, like, that could be in 50 to 100 years or never. Like, this stuff could actually still not be viable.
Yeah, we don't know that it is for sure. Mm-hmm. And also, like, there aren't going to be, let's say it is viable, there aren't going to be like hundreds and thousands of quantum computers. So I was thinking about this. There is an interesting point where it's like, okay, let's say like Google, what is it called, DeepMind or HiveMind or something like that. Let's say it does get to the point where it could brute force attack classical cryptography, public keys, to derive the private key. I mean, it's going to be like one or two of them that have it. If it is in the U.S. At first. Right. That's all I mean. And they're going to know, let's say they like lease it out for businesses to do something with. Mm-hmm. They're going to see if a business is trying to compute on Shor's algorithm and use it for breaking passwords. Mm-hmm. So like there is even a little, but that doesn't resolve the bigger problem, but there is a little bit of a line of defense there that's interesting. Mm-hmm. The best I know of on when, the most aggressive and somewhat confident number is that the U.S. government, I think NIST, recommends that all government agencies be off classical cryptography by 2030. Mm-hmm. And that is only 4.5 years away. Mm-hmm. Doesn't mean that I don't think that means they know that it's going to be viable by then, but it does feel like something we need to plan for. There are a couple plans that I've seen. Hunter Beast has a Bitcoin improvement proposal for it. Project 11 has got their own vision of how it should be mitigated. I saw Jameson Lopp has sort of just released, him and several others have just released a new BIP. Also, it does feel like something we should be talking about. By the way, I should point out that most Bitcoins are currently probably in a quantum-resistant address because they're hashed public keys or hashed scripts, and most people think
as long as it hasn't been spent from.
Well, that's right, because this is the other interesting, tricky problem here, because a hashed address, you'd have to reverse the one-way hash function in order to just see the public key.
Right.
But when you spend from any address type in Bitcoin, you reveal the public key, right? So if you reuse any address type, then the public key is known.
Yeah.
So that's actually, to me, one of the trickiest parts about this problem, because it shouldn't just be that you have to upgrade to a new quantum-resistant address type or add one in and encourage people to use it. You'd have to change potentially the way the signature algorithms work, signature mechanism works, because if we assume that you get to a post-quantum world where classical cryptography can be broken, it's not that far from like it takes 1 year to it takes 1 month to it takes 1 week to it takes 1 minute, and then you'd be at risk in the mempool before your transaction's even confirmed.
Well, yeah, that's why we'll have to upgrade to a quantum secure signature scheme.
Yeah.
And now what I think people might start doing to be very conservative is when they spend from an address, give it direct to a miner so that it's never even in the mempool to crack. but that's a whole nother can of worms.
Yeah, you'd have to overhaul. It kind of goes back to the mempool destruction thing. So that makes it a big enough question. The mitigation would be complicated enough that it does, in my mind, make sense to start working on it now. But
Yeah, I think give people a quantum secure signature algorithm before they need it, so they can start migrating. That's
Right.
The bigger political question is what to do with all the coins that don't move.
yeah,
That's a whole
Well, that makes it a fun thought experiment. And I wanted to also point out that the vast majority of other altcoins are at risk, and like, for example, all EVM chains use reused public keys.
Yes,
That's
those are
their
going to be even
addresses.
harder.
Yeah,
It's almost like Satoshi kind of saw
it's just the beauty of the UTXO
the
model.
UTXO model is like it's pure.
It's quite elegant.
Yes.
Before we wrap, I wanted to also ask you about something that you guys do, I think, more publicly and do better, but also more transparently than anyone that I think I know that does it, which is proof of reserves. You guys perform, I think, a monthly cryptographic proof of reserves, but also you release your own private financials, or what? Tell us what you do. I think you had just started doing this right after we last spoke.
Yeah. So everything we do at River boils up to our mission of building the world's most trusted financial institution. So we always ask ourselves, what can we do to be more trusted? And a big one was, well, we started custodying and increasing a growing number of Bitcoin for our clients. And so we said we should start doing proof of reserves. We should prove every month that every Bitcoin we say we have in the vault. And so we do that. We do a proof of assets. So we show, hey, this is our cold storage address. We send a transaction from that with a random amount showing we control this Bitcoin. We also do a proof of liabilities, publishing an anonymous, sort of fragmented list of liabilities, so every client can verify that their account is included in that list. If it's not, it means we're trying to game it, right? We're trying to lower our liabilities.
I see.
So, and then we also have started publishing our annual financial statements. And we don't have to, we're a private company, but we're a financial institution. And how are you going to know we're safe and sound if you don't know what our financial situation is? And I kind of was like, why don't we do this? And we started doing it, and people have been a fan.
I think because the reserves, the assets and liabilities is saying, okay, you're saying we have 10,000 Bitcoin or 20,000 Bitcoin or 100,000, whatever the number is. And then you're telling the user, okay, but also like we owe X amount to our users, and that's lining those two up. But then the financial statement is like, let's say you had all the Bitcoin that your users had, but what if you owe $10 billion to some other company separately for some other reason, right? Like that's where the financial statement really comes into play.
Yes. Now, well, the good news is we actually don't put client assets on our balance sheet, or we take the position that those assets belong to the client and the client alone, and so River liability would not be those clients' assets would not be subject to that.
It's like a bankruptcy remoteness.
Yes, exactly. That's our position, and that's what we think of, the position a judge would take based on legal precedent we've seen recently. But that said, right, it's like if we went bankrupt tomorrow or something and we just had to shut down operations, that'd still be extremely disruptive to our clients.
Totally.
Even if the Bitcoin's there. Like what if like the system couldn't run, right? Things like that. Also, you don't want to open an account and invest time and effort into using this platform if it's financially on the rocks.
Totally.
Like, why would you do that? So,
Totally.
So yeah, I think it's important to be transparent as a financial institution, and so that's what we do.
Yeah, it's quite interesting. Great products. I swear I'm not. We don't have a relationship with River that I'm aware of, and I'm not paid by River. But I use River. It's my favorite Bitcoin only brokerage. It's a great company, Alex, that you built, and so you have some great products, really great products that I really enjoy using. So just throwing that out there. If you need a Bitcoin brokerage, check it out. There are other good ones. I'm not. It's been a fascinating conversation, Alex. Before we wrap, what gets you excited for River? Is there anything you can tell us about what you guys have coming in the future, or
yes,
what should people be looking out for?
We have a lot of stuff in the works, from leveling up features people really love today, like recurring orders. We have some cool stuff coming there, and to bigger things like our vision is that we're entering this dual money era in the United States where people will continue to spend and earn in dollars but save in Bitcoin, and so we want to be more than just a Bitcoin brokerage for our clients. And so we're building a lot of stuff towards that direction, and you'll see more in the coming months.
Alex Leishman, CEO and founder of River, thank you so much.
Thanks for having me on the show.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Alex Leishman, founder and CEO of River. and our good friend Bimneta Bibi from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.